Yeah.
Good evening, Sir Michael and friends. So now my group and I will be presenting about creations and features of provisions.
So before we dive deeper, what is even provision? So in accounting, some expenses or income can be roughly estimated, making it a fixed constant. However, in some conditions, unexpected things might happen that may cause a sudden change in those numbers. As a result, provision, an account recorded as a liability, is recreated. Some examples where provision is used is in the payment of the trade receivables. As said earlier, unexpected things might happen that could cause the customer to be unable to pay off the debts. To expect this, provisions for doubtful debts are created. Aside from doubtful debts, provisions could also be made for costs of restructuring the company, redundancy costs, and costs for future taxations. By making these accounts, the business applies the concept of prudence, allowing a fair value for the balance sheets.
Creation of provision. Provision also reduce the profit of the company. They also reduce the value of its assets are created to provide for future liabilities where the specific amount is unknown, or the time of settling the obligation is also unknown. The examples are providing for the cost of legal cases against the company, future costs of restructuring the company, including redundancy costs, and setting aside an amount of taxation that must be paid in the future. By creating a provision, the company is following the prudence concept. This allows a fair view of the company's financial situation. They also account for certain company expenses and payments for them in the same year, hence making a more accurate financial statement for the company. The characteristics are provision is a charge against profit, provided for the expected contingency that may arise in the future, such as liability for a disputed claim. And it's not an asset, whether it will reduce the net assets of the company.
So now my friend Sean and I will be displaying an example that would likely be that would likely happen in real life. So I will be playing the accountant on the right, and Sean will be playing the business owner on the left.
Hello, good morning, Kenneth.
Good morning.
So it is nearing the end of the financial period. I always wondered what provisions need to be made each year. Could you help me with that?
Okay, so the provisions depend on each account. Would you mind reminding me which accounts need provisions?
It's 1 million in trade receivables and 2 million in company cars.
Okay, so from your information, this is a snip of your current financial statements. Starting from the trade receivables. Trade receivables are not a guarantee to receive cash. Sometimes a business are unable to pay their debts. So, following the principle of prudency, we must create provisions. The balance for provisions for doubtful debts vary depending on the balance of trade receivables and how long they have debted for. As an average, our company uses 5% of all trade receivables as the balance of provisions for doubtful debts. This way, if a debtor business fails to pay, we are certain we have enough funds to cover it.
So what does BD mean on the credit side? And why is there a balance on the debit called profit and loss?
The entry labeled BD was our balance for the provision for doubtful debts from last year, and their profit and loss entry is because we need to add a further 5,000, reporting it to the profit and loss sheet. The next and final provision is the provision for depreciation. Unlike the provision for doubtful debts, this one does not stand for precaution for a certain disaster. It is actually the accumulating of a product's depreciation instead. For the depreciation of our company cars, we decided to use a 4% depreciation rate. So, from the last accounts lesson, could you tell me what this account means?
So from my understanding, since our company cars are worth 2 million without depreciation and that the rate is 4%, the BD entry signifies that the cars have been used for 2 years. The depreciation is at 80,000 each year.
So the next and last thing we will discuss is the textbook example. This is a similar but more complete version of our example. So from this textbook example, we can understand more about how to record the sale. First, we transfer the cost of machines sold and all the provision for depreciation on the machine to the disposal account. After entering the payment received, we then decide whether it is a profit or loss. In this example, there is an additional loss of 88,160, which will be credited to the disposal account to balance the account to zero. Finally, this will be transferred to the statement of profit or loss and other comprehensive income as an expense. As we can see, the journal entries would be divided into 3 steps. Step 1, an amount of 55,000 is inserted into the debit side as the disposal. And the same amount of 55,000 would be added to the credit side as the furnace. Then, step 2, at the debit side, with the provision for depreciation of the furnace with the amount of 26,840, and the same amount of disposal is added to the credit side. This is similar to our example that we have made and stated before. Lastly, in step 3, at the bank in the debit side with the amount of 20,000 and at the same amount of 20,000 disposal in the credit side.
These are entered into the disposal account. The balance and figure in this account will represent either a loss on disposal or a profit on disposal. This amount can be calculated as follows. So the cost is 55,000, provision for depreciation is 26,840, carrying value is 28,160, revenue from the sales 20,000, and loss on disposal is 8,160. So for the furnace account, the balance BD was stated in the debit side, which is 55,000, and on the credit side, it was stated as disposal, which is 55,000. The provision for depreciation account for furnace in year 1 on the debit side, it was stated as balance CD, which is 11,000. And on the credit side is the depreciation furnace, which is also 11,000. For year 2, on the credit side, it was stated as balance BD, which is 11,000 from the previous year, and plus the depreciation furnace this year, which is 8,800. And on the debit side for year 2, it is stated as balance CD, which is 19,800. For year 3, the balance BD for the credit side is 19,800, which is the total from the previous year, year 2. And on the debit side, it is stated as disposal of furnace, which is 26,840. Then we could see that this depreciation in the credit side for year 3 of the furnace is 7,040, which sums up all of them equals to 26,840. For disposal account for furnace, on the debit side, it was stated as furnace account, which is 55,000, and on the credit side, it was stated as provision for depreciation, which is 26,840, bank, which is 20,000, and statement of profit and loss, which is 8,160, which sums up into 55,000 on both sides. The entry for the statement of profit and loss and other income represents the balancing figure and a loss on disposal. From this, we can see that the loss on the sale of the asset is identical to our previous calculation.
Thank you for listening to our
Thank you
presentation.
for listening.
Udah kan ya?